series, we're growing a Robinhood account from $0 all the way to 1 million. And I'm going to show you every step of the way how I get there. So first and foremost, the account is right shy of $5,500. We're down $86 today. That was mainly due to the pullback in NIO after the China stimulus news. That was partially offset by SPY puts that I purchased yesterday. So I have some butterfly spreads, and I can talk a little bit more about that strategy in another video. But I want to share with you the current portfolio, what I'm bullish on, what I'm bearish on, and then cover a little bit about what to expect in the next coming weeks with the market, because there's a lot of volatility. And I do think that we're going to have a larger correction in the market. So these are the current open positions. I would say that Sava, this is one that I'm underwater on. I'm just trying to get out of that with a minimal loss. And then I'm bullish on Grab, and I'm bullish on NIO, and then I'm bearish on SPY. And then I also have some shares of NIO GRAB and a bit of tuah, which is a leveraged China ETF. Looking at the tracker, this is linked in the description below. You can see that so far I've contributed $4,400. This was at the start of November, so we're up about $1,100 in the portfolio. These are all the positions that I've either entered into or currently have open. You can see here that Grab and NIO, I have 6 and 9 calls open. I also have 208 shares, 100 shares of Grab. And then I currently have some open puts. I've sold puts on NIO and Sava, and then I've bought puts on SPY and Soxel. So I'm also bearish on semiconductors and AI right now. I think that it's had its run, and I think it's going to be due for a pullback. Looking at the calendar, so it's always important to know what's happening, what events are happening, what the Fed is going to be doing, what's going on with the economy. You can see here that CPI, that does report tomorrow, so we're going to get a readout on inflation. That will impact what the Fed is going to do in December. Currently, they are predicting that there's going to be a 92% probability that the Fed is going to lower rates by 25 basis points to 4.25 to 4.5 on December 18th. So I still think that this is baked in. I think they are going to lower rates because unemployment, housing, all of those things are starting to unwind a little bit. The job market is not as hot as it used to be. The tech job market, I'm in tech, has been abysmal. So there's a lot of issues currently going on in the economy in the white collar department. So I do think that overall unemployment's going to continue higher. There might be a recession, and there should be at least a market correction in the next couple weeks, because if you do look at the charts, which we can pull up here, SPY has been on an absolute run this year. It's made 57 new all-time highs. You can see here, this was actually the day that SPY, this is beginning of the year. So from this line onwards, we've just been pushing up and to the right. So it's been a massive gain. A lot of people have made a lot of money, but I do think that the end is kind of near, and we'll have a healthy pullback if we look to continue higher. However, if we do enter into a recession next year, typically the returns could be negative 25 to 30% on average. So I do think there's a lot to look out for in the coming weeks. But just on a micro level, you can see here that after the election, this was on November 5th, we had a push to the upside, and it formed this gap around 575 to 585. And we never quite filled that gap that it formed. We came back down, we tested the entry point to the gap, but then we bounced from it and pushed to the upside. I do think at some point in the coming weeks, we will go back down and fill in this gap. Now, it might act as support and we'll push back up. Maybe we'll continue to push to the upside, just depending on where things are. But there's also a really high chance that we could break through this gap and continue lower. This has acted as a resistance level in the past, and we might find stronger support around 565. But we also do have a gap that was never filled around 505 to 508. I don't think we're going to get there anytime soon. That could take months if we play out kind of like 2022 when they were raising rates and we had this long drawn out move. I do think something like that could be possible. But I do think that this 540 level, which is the target of my butterfly spreads, and with a butterfly spread, you have 3 different strikes. I chose 575, 540, and 505. So you have to have equal distance on each side. And the way the profit works is kind of like a tent. So the closer it gets to 540 by my expiration, which is in March, so it's a lot sooner, like over here. If it gets to 540, I'll get my max payout, but my break even's around like 573. So I really don't need SPY to drop all that much from a relative perspective for me to start making profit. So butterfly spreads are a really interesting position where you can maximize your gains with only a little bit of payout. So like $350 could pay out over $6,600 if SPY closed at 540 on my expiration date. So it's a nice little hedge on the portfolio because I'm still bullish on Grab and NIO, and I want to continue to accumulate shares for the longer term. So that's just something to keep an eye on. And then obviously Bitcoin and crypto, there's been a lot of volatility recently. Whether or not this holds, I'm not quite sure. I've actually was long Ethereum and cut out of these positions. And usually at the end of a rally, you're going to have cryptocurrency and meme stocks and everything run up, and then they start to crash, and then the overall whole market follows because those are the riskiest assets. And when those start to fall, it's kind of like a risk off across the board, and people start to sell and take profit. So that's something that could potentially happen. And then even just looking at AMD, you can see it's in a clear downtrend. I think this is going to continue lower. People keep trying to buy the dip. It's something that I rather just wait until it's at the absolute best price for me to purchase. And then same thing with SOXX. This is semiconductors. You can see that it's kind of like in this head and shoulders pattern, but also forming into this falling wedge, which is actually bullish, but I do think that it'll come down here and test this like 190 zone. And then at some point it'll break to the upside. So I think this is going to continue lower. I want to buy in here and then ride it up to the upside. So I'm just being patient, trying to minimize my risk as much as possible and maximize my reward. And then one last thing I'll just leave you with in this video is this is a bit more nuanced. I don't think a lot of people talk about this, but in the month of December, and this is why I bought SPY puts, is there's U.S. futures equities roll on 12/16 to 12/20, and then there was also the Nikkei on 12/9 to 12/13. And when they're rolling from one contract to the other, it creates a lot of volatility in the market as these contracts are selling and buying another. And that creates a lot of volatility. So the VIX being so low around like 12 to 13, 14 range, that is likely going to push to the upside. And that's because people are buying SPX puts in order for VIX to go higher. And so whenever there's more volatility and the VIX goes up, the market naturally drops. And in 4 months of the year, this is quad witching, which you can look up online, but essentially it's 4 different types of derivative contracts all expiring in the same week, which also creates a lot of volatility. And that's the week of the 16th to the 20th. You also have VIX expiration. So we could have a stronger move on the upside of VIX, and the S&P 500 is going to decline. So these is like a nice perfect storm of things happening. If Bitcoin can continue to hold and push higher, I think this will be delayed and the market will follow. But I think that the days are numbered, and that's why I'm starting to hedge my portfolio. But there's not a lot of money in the account. I'm just hoping that the market can have a larger correction, because as I'm depositing more money in and accumulating shares, once we do wash out all of the stocks, I'll be able to buy everything for really cheap. And then hopefully a year from now is when we'll be making a lot of money on the upside. So hope you enjoyed this video. Really would appreciate it if you like and subscribe, but I'll see you in the next one. Peace.